What's up, everybody? It's your boy Sham, the BJJ lender, and today we're pulling guard on the IRS. Not panicking, not scrambling, not fighting strength with strength. A calculated guard pull. The kind that gives you angles, leverage, and control, even when the opponent looks bigger. Because wealthy families, they've been using charitable giving strategies to reduce taxable income for decades. Quietly, cleanly, legally. So, if you're a high income earner, listen close. This might be the most important episode of the entire season. Hit my damn intro. Alright, let's keep it real right off the bat. This is one of Fortitude Strategic Wealth's most requested advanced tax strategies. Entrepreneurs, physicians, real estate investors, high-earning W-2 professionals, everybody asks the same question every year. How do I legally reduce my AGI and keep more of what I earn? And structured charitable planning, it's one of the core pillars of our clients' long-term wealth ecosystem. It's clean, it's compliant, it's powerful. And most importantly, it gives you control. So today, we break this all the way down. Now look, a charitable guard pull ain't throwing $20 in the bucket at CVS during the holidays. That's not what we're doing here. This is structured giving, strategic, intentional, and IRS approved. Designed to redirect money you were already gonna lose to taxes and move it somewhere you actually care about. We don't do hacks, we don't do loopholes, we don't do shady multiplier language like it's some TikTok tax code shit. This is understanding the rules and playing the game like a black belt. Because if taxes are the fight, position is everything. All right, y'all, let's start off with number one, donor advised funds, DAFs, immediate AGI reduction. You control how the funds get allocated over time. The money can even be invested inside the DAF. Clean, simple, flexible. A DAF is like a closed guard, solid, safe, slows everything down, gives you time to breathe and set up your next attack. Second, we got the Charitable LLC, structured philanthropy entities. It's built for entrepreneurs. You contribute cash or appreciated assets. Flexible operations, more tools, more angles, more control. This is Butterfly Guard. Creative, dynamic, gives you options, lets you play at your pace. Number three, private foundations. This is elite of elite, multi-generational. Family governance, long-term structure, requires discipline and compliance. A foundation is mount, powerful, dominant, but you don't play with it casually. You need control, focus, and technique. When you contribute to a qualified charitable structure, the IRS allows you to reduce AGI. The number that controls almost everything about your tax situation. Lower AGI means lower tax exposure. Lower AGI means more flexibility for planning. Lower AGI means more money staying in your ecosystem. You're not losing money. You're reallocating it from taxes to purpose. This is how you pull guard, create angles, and sweep the whole damn match. Red flags, y'all. Red flags. Avoid any charitable strategy that promises magic, says secret hack, sounds like a TikTok or OnlyFans trend, has no CPA or attorney involvement, can't explain mechanics, has no documentation, is marketed like a crypto pump. Real strategy doesn't need hype. If they can't explain how it works, that's your cue to shrimp out immediately. Green flags. Look for strategies that are fully recognized by the IRS, have legal and tax team coordination, provide proper documentation, emphasize AGI direction, can be explained clearly, fit your income and structure. Trust me, bro, this is how you stay clean, safe, and audit-proof. What we do out here at Fortitude Strategic Wealth is straight up black belt planning only. Documentation is everything in this game. Wealthy families don't guess, they document. You need receipts, acknowledgement letters, formal filings, entity docs, valuations, Annual reports, dates, details, confirmations. Good paperwork is guard retention. It protects you from everything coming your way. And timing matters. Don't wait until December 29th thinking you about to do some last minute ninja shit. Plan early. Coordinate with your CPA and legal. Respect the deadlines. Aight, that's the technical side. But let me bring this home the way y'all like it, with the real examples you can actually understand. Let's walk through how this plays out in the real world, because I know some of y'all learn better when you can visualize it, like a live roll. Example number 1, the high-income W-2 earner. They're making $300 to $550 a year. Every bonus, IRS waiting. Every RSU vest, IRS waiting. Every overtime differential, IRS waiting like that one white belt jumping guard on site. So we run a DAF. They reduce AGI immediately. They still control where the funds go over time. Now, we've turned tax loss into purpose, clean and simple. Example number 2, the entrepreneur with the profit surge. We're talking about 700, 900 million plus entrepreneur who has a monster year. Suddenly, the IRS is on them like side control. So we use a charitable LLC, flexible, entrepreneurial friendly, because it lets them reallocate income while preserving cash flow. Now, their AGI drops, their year stabilizes, and they give with intention, not panic. Last but not least, example 3, the legacy family. These are the 8-figure earners, families building dynasties. You could be one of them. For them, a private foundation is the move. This isn't just taxes, y'all. It's governance, legacy, stewardship, kids learning, responsibility. It's a long-term mount control. This is how wealthy families have been doing it. Quietly, strategically, legally. No matter who you are, W-2 killer, entrepreneur, legacy family, you're not donating blindly. You're reallocating with intention. You're playing the same game the wealthy families mastered years ago. There are advanced models with even more efficiency, but I can't break those down publicly, y'all. Not because they're shady, because they depend on your income, your structure, your documentation. If you want the real version, not the podcast version, book your consult, because I can't give you all free smoke out here, dog. All right, y'all, let's bring it home. If you're earning 300 G's or more and you're tired of overpaying taxes and ready to redirect those dollars into purpose and legacy, hit the link and schedule your consult with the Fortitude Strategic Wealth team. Follow, like, comment, subscribe, YouTube, TikTok, IG at the BJJ Lender. Share this with your teammate or business partner. Put them on game. I'm the BJJ Lender, your favorite financial black belt, not to get confused with my Jiu-Jitsu purple belt. And this season, we don't just roll, we strategize. Until next time, y'all, it's your boy. Peace.